All right, welcome back everyone. In today's video, we're going to be talking about what I believe is one of the most undervalued, highest quality businesses in the stock market today. And you might notice that we are on the new TypeF Capital website, and that is because we have a new feature called Model Viewer. So for those of you familiar, I sell Excel-based models, financial models for Robinhood and Palantir. They are currently 40% off if you want to get those. And what we're going to be doing with those is we're going to go into the model viewer and we are going to open up Robinhood. You can open up Palantir as well. Those are the ones I sell. And then we can launch them. So for those of you that are familiar, I aggregate all the core intrinsic value drivers, calculate KPIs. I do everything by hand, by myself. So this is the most comprehensive resource for both Palantir and Robinhood. And of course, not everyone has Excel. So I decided to build, using a Perplexity computer actually, I decided to build a chart viewer. So there is a charting tool inside the Excel sheets, but now I also have a model viewer. So we have Robinhood here. You can switch between Robinhood and Palantir. But if we go into charts here, we have the charting tool from the Excel sheets built into the web. So you can actually view the same charts here. So what we're going to be going through here is Robinhood's financials. Switch over to the annual view because we have it available now that they reported fiscal year 2025. And you know, Robinhood, they shared during their Q4 presentations, they shared what the main priorities are for 2026. And no one is really surprised that it is going to be prediction markets. And let me show you why that is. So if we go over to prediction markets first, you see that prediction markets are relatively new here. And it grew actually massively, over 300% year over year, just tracking, you know, Kalshi, Polymarket, Myriad, Limitless. So I aggregated their volumes by myself, like how many million contracts were traded on each platform. And you can see here that something interesting happened. If we look here in 2024, Kalshi traded 1.9 billion contracts, while Polymarket traded 13.8 billion contracts. Jump to fiscal year 2025, and we have Kalshi at 24 billion and Polymarket at 27. So close the gap very, very quickly there. And it's even more obvious if we look at the quarterly. So you can see that Kalshi suddenly started growing a lot here and taking a lot of market share. And why is that? Well, let's go over to Robinhood's event contracts. And, you know, Robinhood is partnered with Kalshi. That's their partner for event contracts. And you can see here, the percentage here is how much of Robinhood, how much of Kalshi's total volume was traded on Robinhood. So how much did Robinhood contribute as a total? Q4 and the Q1, about 35%, but then a majority of Kalshi's volume was actually traded on Robinhood. And you can see something interesting here. If we look at, well, I don't have Q3 here, but for Kalshi specifically, but Kalshi grew volumes by 22,409% from Q3 to Q4. So if we go back to prediction markets here, Kalshi was basically nothing here. Then we got Robinhood joining here in Q4. And now you can see Kalshi is very, very dominant. So Robinhood, major contributor to Kalshi's overall volumes and market share gain. And, you know, Robinhood, they went from basically in Q1 of 2025, they traded 300 million contracts. And by the end of the same year, they were up to, you know, 8,500 million. So, you know, massive, massive increase on Robinhood. So it makes sense that this is going to be their main priority. And I know some people really dislike this about Robinhood, but I think it's worth talking about because this is going to be a major, major revenue driver for Robinhood. And basically, any event that is happening, be it political, be it within pop culture, be it sports, anything basically is an opportunity for an event contract. And that comes with ups and downs. I think some markets are going pretty crazy. I mean, I've seen people placing short-term 30-second contracts of how many cars are gonna pass an intersection within like a 30-second time frame. Like some really stupid ways to use event contracts, and that basically just invites regulation, and you don't really want that. Now, Kalshi is a lot more responsible, and not all Kalshi contracts are on Robinhood. So Robinhood is taking a more prudent approach, which is the smart thing to do. Like, you want to grow this, but you want to grow it like in a legitimate, professional way where you don't really invite a lot of regulators. So I think they're doing a good job. They're growing a lot. So, for 3 quarters in a row here, Robinhood has contributed more than 50% of all of Kalshi's volume here. So it makes you wonder, okay, well, does Robinhood really need Kalshi when they are, contributing more than 50%? Well, they recently closed a deal to acquire, let me see if I get this correctly, MAIAX Derivative Exchange. I don't know how to pronounce that. But basically, through a joint venture with SIG, Susquehanna, they acquired a CFTC licensed designated contract market. That also includes a derivatives clearing organization and a swap execution facility. Basically, it will allow Robinhood to cut out the middleman here, which is Kalshi, and they can avoid a revenue share with Kalshi by, doing it on their own. And it makes a lot of sense for Robinhood to transition into that now that they're contributing, a majority of Kalshi's volume. Not so bullish for Kalshi, which, has gone on to partner up with more brokerages like I think Webull uses them. I think Coinbase uses them as well. So they won't be stranded, but they will probably lose a lot of volume that was originated at Robinhood. And it makes a lot of sense to do it through a joint venture because SIG, provides day one liquidity. It will also allow, to have reasonable spreads day one. It will allow for, reliable execution day one. So it makes a lot of sense to do it through, some experienced market maker. Makes a lot of sense. So that's going to be a priority throughout 2026. I expect them to, not to divest, but basically cut out Kalshi sometime this year. Probably not going to be this quarter or next. It's probably going to take some time, but throughout the year, I expect that a majority of this is going to be exclusively on Robinhood and not through Kalshi. But for those of you that are, I've seen a lot of comments where people are really bearish on offering event contracts on Robinhood. It's a brokerage. It's supposed to be a financial super app where you can do banking, do serious stuff, and they don't really view event contracts as serious stuff. I think the numbers speak for themselves. I mean, this is growing fast, whether you like it or not. And I, as a Robinhood investor, would rather that Robinhood is participating here, especially when they are so dominant in it. I think there's a lot of money here to be made for Robinhood. So that's going to be one of the major things. And they are gaining a lot of market share very fast. Of course, prediction markets are not the only area where Robinhood is gaining market share. If we go over to the equities market share, it actually grew to an all-time high, even higher than the 2021 meme mania. So, by calculating using the US equities notional volume, we can kind of get a sense of the market share that Robinhood has by looking at, their volumes against the overall US equities notional volume, and it is up to over 1% now, 1.1%. If we look at the quarterly, actually for the past 2 quarters, it's been at 1.2. Of course, it's not an all-time high on the quarterly. That happened in Q1 of 2021, the height of the meme craze. But, on an annual basis, this chart and this trend is very clear. They're gaining market share and then gaining it fast. They basically doubled their market share in 2 years. But also, not only market share, if we equity market share, if we look at crypto market share, it's also growing. Now, back in 2021, they didn't really surpass an all-time high the way they did in equities. But if you look at overall here, since then, if we disregard the 2021 meme craze, they are gaining market share very, very fast. Similarly to equities, they doubled from 2023. Now at 0.78% or 0.8% rounded. And for the past 2 quarters, similar to equities, it is higher than the annual one at 0.9. So basically approaching that 1% in crypto as well. Now, the way I calculate the crypto market share, because we don't know the exact distribution of various coins on Robinhood, they don't report, the holdings anymore for their customers. They used to do that to some degree, and majority actually was, Dogecoin, Ethereum, and Bitcoin. So the way I calculate, this approximation is that I look at overall volumes for Bitcoin, Ethereum, Dogecoin, and then I map it against, Robinhood's overall crypto volumes. So that's how I get, an approximation of their market share. It's not exact because they don't disclose the exact holdings, but it's somewhere around there. And also the options market share doing beautiful things as well. Now, this is the biggest, cash generator for Robinhood, because options has the biggest spread, and they have an 8.1% market share in Q4 of 2025. If we look at the annual, it's up to 7.5. Not quite a double since 2023, but seeing this go up is really, really bullish because, equities, it's a very mature market. There's not a lot of spreads. Market makers pay for the order flow from Robinhood. And when there's not a lot of spreads, they're not willing to pay a lot for that, order flow. Now, crypto, it's not as mature as equity, so market makers pay a lot more. There's mainly Citadel paying Robinhood for the crypto order flow, while it's Virtu Financial for equities. But the options, that's where you really get the big spreads, because options, even though it might be familiar to me and you, to the overall, addressable market of all investors out there, options are still relatively, undiscovered. Like, not a lot of people trade options, believe it or not. So there's still a long runway of wide spreads in options, and you want to get that market share while it's still, immature. You want to get the majority market share. And I believe as of Q4 that Robinhood is the single largest, options brokerage by percentage, 8.1%. I believe that that's the biggest one. So very, very bullish for Robinhood. Now, gaining market share across, everything basically. What does that translate to in terms of revenue? Well, it's 52% year over year, 58% back last year. And as you can see, when you are very heavy into, transaction-based revenues, meaning trading, you're kind of reliant on the market. You need there to be a lot of volatility that increases spread. You need there to be a lot of volume. You need there to be volume in the more profitable, transactional segments like options and crypto. So this is volatile. So if we look on a segmented basis, we can see here that back in 2021, it was basically a majority being transaction-based. And since then, the other portions are starting to grow a lot. And this is crucial for Robinhood. And this is crucial to track for Robinhood specifically. You need the other segments to grow. Now, transaction-based revenues are still, more than half of overall revenues. But sometime the market will be, very cold. There's not going to be a lot of volume for periods of time. That's when you need these other segments to step up and reduce the volatility in the financial results. Basically, you don't want to see what happened in 2021 where you have, these peaks and then, transaction-based revenue drops and you have this, drought for, it took, how many quarters is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 quarters before you surpass that Q2 2021 peak. You don't want that to happen. So if we look at here we go, subscription revenue for 2 quarters in a row, it's grown over 100%. And if we look at the annual one, 70% in subscription-based revenues from fiscal year 2024 to 2025. And a majority of that is, of course, the gold membership. That's very sticky, very predictable in a sense. It's not only gold subscriptions, but that makes up a majority of it. So that's what you want to see. You want to see that conversion of people actually getting gold. And Robinhood is doing a great job. I think in 2025 alone, they shipped 55 major product and feature releases to their platforms. 55. Can you name any other company that shipped 55 products and feature releases in 2025? No one really is executing to the level that Robinhood is. That's why I believe that they're going to continue to be, the premier brokerage, or even, have a shot at, becoming a financial super app. And you need to incentivize people to actually get a gold subscription, by offering a lot of value. And I think they're doing a good job there. They're converting a lot. We can actually jump to gold subscribers. We can see that they increased from 10% adoption rate to 15.5. That's, a 50% increase just year over year. So that's, huge. You need that to keep going up because, as I mentioned, that's sticky, predictable. That's what you want. And, the trajectory is very clear here if we look at the quarterlies. Anyway, let's go back to revenues here. So that's one component. You need, the subscription-based revenues to keep growing fast, and fast they are growing. Let me just find here. Subscription revenues, over 100% for 2 quarters in a row. I expect that to continue to grow incredibly fast. But the other component that we need to keep a track on is actually the interest earning assets. And we can see that this is growing also very, very fast, almost, a bit more than 50% year over year here. But what it does for the overall revenues, you can see that we have the margin book, we have the cash and deposits, the cash sweep, and the credit card. So these are all interest earning assets on the platform, but not all of them have the same yield. So you want the higher yield ones to make up a majority of the interest earning assets. So if we look here at on the fiscal year, the highest yield is still the credit card, which they are actually starting to roll out now a lot quicker than they have in the past. They've been very, very timid with, releasing those cards. They seem to be accelerating now. A lot more people are getting their Robinhood Gold card, and now they just announced the Robinhood Platinum card. And that is a very, very high yield, 10.14% for the year. Annualized yield for the credit card. We can see here that the cash sweep is only 0.74% yield. And if we look at the interest earning assets, the cash sweep is, a very, very large part. It's actually the largest component of the interest earning assets, but, it's also the lowest yield. Similar with cash and deposits, it's also pretty low yield. It's basically the margin book and the credit card that have, substantial yields. So the margin book is, at 5%. Cash and deposits actually not that bad at, basically 4%. But you want to see this, over time, depending on interest rate and the interest curve, the cash related interest earning assets will go down, as we can see here. When interest rates are high, you can get a lot better yield on the cash, but when it's not, it's going to be going down, like we can observe in 2024 and 2025. But as they keep growing, the overall assets, that's what you want to see. So let me see if I can get the subscription revenue. We looked here, interest revenue is what I'm looking at. So interest revenues increased 37% year over year. On the quarterlies, 39% and 66%. So basically, the end of the year here, a lot faster growth than we had, at the start of the year. It's a lot to do with the comparison periods, but what really will look astounding is when we look at here we go, the AUC breakdown. So this is growing very, very fast. So basically, more than tripled the assets under custody in 2 years. So up to 106 billion here in 2023. Now it's 324 billion. And the majority of that is equities. But we can see here that basically, I don't expect this to, slow down anytime soon. This is what you want to see as people migrate over. We're getting a lot of incentives from Robinhood for people to, migrate their accounts over to Robinhood, capturing more of possible assets. So, now they also serve as a bank, so you can, do all your banking on Robinhood. Even more incentive to move all your assets over to Robinhood. And that's going to be increasing. So, 50% here. Year over year, more or less. Very, very impressive trajectory overall, and I expect that to continue. Interestingly enough, crypto didn't really grow from 35 billion to 40 billion, crypto. So it's really, equities carrying here. And the cash actually decreased year over year. So it means that, overall people are more invested, which we can see, in the equities. Options, grew more than 50%, but it's still relatively small as a percentage of the total. If we look at net deposits here for the fiscal year, 68 billion, also great. But what's really impressive here is not average assets per user. I want to look at average revenue per user. So that grew 43%. So Robinhood, as they increase assets, as they, release more features, as they, release more markets, they find increasingly more ways to start making money off of their users. And this is something that SoFi, for example, struggles with. SoFi, keep spending more on acquiring customers, but, the average revenue per user is not really growing as aggressively as you can see with Robinhood. So if we go actually to this chart here, the customer acquisition cost. So here's something really interesting. So the golden one here is average revenue per customer. And the white line here, or the brighter line, I don't know if this shows up well for the colorblind. I should probably, mix this up. But the other one is the customer acquisition cost per customer. So basically, what you want to see is the average revenue per customer being higher than the cost of acquiring that customer. And as long as that line is above, that's good. The wider the spread, that's even better. So if we look here annually, even though Robinhood is doing all of these incentives to, acquire customers from competitors, they're actually doing it very, very responsibly. And basically, each acquired customer pays for themselves twice within the same period of being acquired. So basically, however much they are spending now on acquiring customers, within the same period, that same customer pays themselves off twice within the same period. So, of course, very, very impressive. And that also extends to the rule of 40 for Robinhood. So up to 108, which is of course, astounding, amazing. Only like the likes of Palantir is similar here. So the rule of 40 is basically measuring the quality of your growth by combining your profit margin with the rate of your growth. Now, different companies choose different metrics to represent their growth and their profit. This is not a gap metric, basically. So you can basically calculate it however you want, but industry standard more or less is using operating margins and revenue growth year over year. And Robinhood here reporting a score of 108, 107 last year. So that means that they are growing very, very fast and they're doing it very, very profitably. When you can increase, if we look at the gap profit margins here, the trajectory is up. They're up to 47% net income margins and 50% operating margins. 50% operating margins, that is insane for Robinhood. And of course, we know that the revenue growth is also above 50%. So you combine those, you get a score of 108. So very, very impressive, on the profitability, on the revenue growth. And I don't believe that it's about to stop anytime soon. As we talked about in the beginning of the video, the prediction market's growing massively. They're going to be taking a larger revenue share as they launch their own, exchange for this. And if we look here at the adjusted free cash flow for the company, also growing, massively. So 26% in 2024, now up to 53%, more than doubled the free cash flow to the firm margins. So this, because I'm doing it, free cash flow to the firm, you have to kind of make some adjustments because Robinhood, as a brokerage, they move a lot of assets in and out, so that affects the working capital. So you have to adjust the working capital to only represent the operations to get a better view of how much cash is Robinhood actually generating. And 53% of that top line, is straight cash generation. So extremely profitable business here. Very, very impressive. And let's see here. Stock-based compensation come down massively. Only 7% as a percentage of overall revenues. Very, very low. Not an extremely dilutive company. Average trade size, going up as, you have more and more serious investors going to the platform as people, get more, as Robinhood gets more credibility overall. It used to be seen as, this meme broker. You go there to, YOLO, gamble on, crypto, whatever. But actually starting to attract a lot more serious investors with a lot more capital. So the average trade size is actually going up a lot. So average equity trade size now 3.5K US dollars, and the average crypto trade size is 1.1K. So that is up from 2.26 for equities in 2024 and 918 in cryptos. So, wherever you look at the company, it doesn't matter what metric we pick here. Everything is going straight up, and there's no reason to believe that that's going to stop anytime soon. They're gaining market share everywhere. They're shipping products really, really quickly. And they are, becoming more disaggregated. So not everything, is going to be driven by transaction based, because they are growing, the other segments really, really beautifully as well, to get less volatility over time. And because it is so concentrated today, the stock has, taken a massive hit. So currently at $77, my fair intrinsic value for the company is 157. So that's more than 100% upside for, a super high quality business. And I don't believe, given the growth and the margin profile, that paying, 23 times price to sales today on the trailing 12 months, I don't believe that that's, expensive either. So not only is it, undervalued, it's not that expensive either. PE, you can argue, if 55 is paying a bit too high of a PE for those that care. So in my opinion, the way that they are growing margins and top line, I think this is fine on a trailing 12 months. That's gonna go down as they grow into those multiples. But on a valuation basis, when you actually don't look at the trailing 12 months, but you look out 10 years, what's the business going to be doing, and how much cash are they going to be generating, and what's the risk of acquiring that cash? It's a double, from where it's trading today just to reach fair value. So I think that Robinhood still is one of the best companies to be buying today, in my opinion. Of course, that's not any kind of financial advice. And, Robinhood, they're not only focused on, prediction markets going into... we didn't even talk about the retirement AUC. They just keep launching more products. It's growing very, very fast, 102% here. The retention rate still above 90%, very, very strong. That's elite within the industry when you can have, above 90% customer retention rate. But, it's not all about prediction markets here. They actually disclosed a lot more goals for 2026, the priorities, and also, the next 10 years, what they're going to be doing. I'm not going to be covering this, all that in this video, because I'm trying to keep them a bit shorter. I just give you, the main highlights. But if you are curious about all the financials, everything that the company will be doing, and a review of Q4 and, 2025 as a whole, I wrote this article over on the Substack, so you can go to research.typefcapital.com. I'm going to be leaving a link in the description here. And you can go and read, everything that we just went through. And if you want, all the data for the sheet with free updates, it is available on typefcapital.com now with 40% off. I'm going to leave it for a few days, and then I'm going to bring the price back up. You can also get the Palantir one. So have a look at that. You can see, we are approaching, 1,000 rows. You can see everything that is included in the data sheets. It looks like this, if you haven't seen it before. So this is the, charting tool inside Excel. The valuation model, you get access to that. And I seem to have removed the slide where it shows, all the data, but it is available there. So all done by hand, hundreds and hundreds of hours getting everything, not only what the company reports, but also, gathering data, how much volume did Kalshi do, what's the, market share. So calculate all of that for you, so you can only, open it up and analyze the company at your own leisure. So with that said, thank you so much for watching, and I will catch you guys in the next one. Bye-bye.